a stock that's fallen over 60% this year, trading at just $3.76 per share, yet Wall Street analysts still see it climbing to $5 or higher in the next 12 months. We're talking about a company that operates one of the world's most recognized dating apps with millions of active users, generates over $1 billion in annual revenue, and is now sitting at prices that could represent an incredible turnaround opportunity. What if I told you this isn't just some failed tech startup bleeding money? This is a profitable company with strong free cash flow, a clean balance sheet, and aggressive cost-cutting measures that are already showing results. The stock has been absolutely crushed, down from highs of $9 to under $4. But here's the thing, sometimes the best opportunities come when everyone else has given up on a stock. I'm talking about a dating app company that's completely reinventing itself with artificial intelligence, focusing on quality over quantity, and positioning for a strategic turnaround in 2026. Multiple analysts have recently upgraded their outlook, citing strong operational improvements and an undervalued stock price. With the company trading near all-time lows and implementing a transformation strategy that's already delivering results, this could be one of those contrarian plays that rewards patient investors who see what others are missing. But before I reveal which stock I'm analyzing today, if you're new to smart investing, welcome. I'm dedicated to uncovering undervalued stocks and hidden opportunities that most investors overlook. I do the deep research and analysis so you can make informed decisions based on fundamentals, not just market sentiment. If you want to discover more opportunities like this, stocks that have real turnaround potential before the crowd catches on, make sure you hit that like button and subscribe to Smart Investing. New videos are posted regularly covering the best investment opportunities in the market. Now let me reveal which beaten-down stock could be setting up for a major comeback. The company I'm analyzing today is Bumble Incorporated, trading on NASDAQ under the ticker symbol BMBL. Bumble is the company behind the popular Bumble dating app, where women make the first move, as well as Badoo and several other dating and social networking platforms. Founded by Whitney Wolfe Herd in 2014 and headquartered in Austin, Texas, Bumble went public in 2021 and quickly became one of the most talked about tech IPOs. The company operates a family of apps serving millions of users across North America, Europe, and internationally, generating revenue through premium subscriptions and in-app purchases. Their flagship Bumble app has differentiated itself by empowering women to control the conversation, which has resonated strongly with its target demographic. Here's where the Bumble story gets interesting. Yes, the stock has been demolished. It's down about 60% year-to-date and trading at multi-year lows. But underneath all that negativity, there's a transformation happening that the market is undervaluing. First, Bumble is aggressively cutting costs. The company recently announced a 30% workforce reduction, trimming about 240 positions to streamline operations. While layoffs are never great news, this is part of a broader restructuring aimed at improving profitability. The company has already terminated its tax receivable agreement early, saving $186 million in future payments. These aren't desperate moves, they're strategic decisions to improve margins and cash flow. Second, the company is pivoting hard into artificial intelligence. Bumble is integrating AI throughout its platform to enhance user experience, improve matching algorithms, and create more personalized interactions. Their AI-driven search features and conversation enhancements are designed to keep users more engaged and willing to pay for premium features. In an industry where user quality matters more than sheer quantity, these innovations could be game-changing. Third, despite the revenue challenges, Bumble's financials aren't as bad as the stock price suggests. The company reported Q3 2025 results with $246 million in revenue and achieved GAAP profitability. More importantly, they generated $77 million in free cash flow and maintained a 34% EBITDA margin. The company has no debt and a clean balance sheet, giving them flexibility to navigate this transition period. Looking at recent developments, there's been a mix of challenges and opportunities. In Q3 2025, Bumble reported a 10% year-over-year revenue decline to $246 million, which was actually better than feared. The The company's shift toward quality users over quantity has meant fewer total users but better monetization per user over time. The company appointed Kevin Cook as its new chief financial officer in August 2025, bringing over 30 years of financial management experience from companies like Cloudera and Barracuda Networks. New leadership often signals a fresh strategic direction, and Cook's expertise in financial turnarounds could be exactly what Bumble needs. Analyst sentiment has been evolving. While some firms have lowered their price targets due to near-term headwinds, others see value emerging. The average analyst price target sits around $5, representing approximately 33% upside from current levels. Some analysts have targets as high as $7, which would be nearly double the current price. So where is Bumble headed from here? Currently trading at $3.76, the stock is at a critical juncture. The average analyst price target of $5 represents a realistic 12-month outlook, though the range extends from $3.50 on the pessimistic end to $7 on the bullish side. I see several potential catalysts that could drive the stock higher. First, if the cost-cutting measures translate into margin expansion and stronger profitability in upcoming quarters, that could restore investor confidence. Second, successful implementation of their AI features could reverse the user engagement trends and drive revenue growth. Third, at current depressed valuations, Bumble could become an acquisition target for a larger tech company looking to enter or expand in the online dating space. The bull case scenario is straightforward. If Bumble's turnaround strategy works and they return to revenue growth by mid-2026 while maintaining improved margins, I could see the stock reaching the $6 to $8 range over the next 12 to 18 months. That represents 60% to 110% upside from current levels. The bear case is equally important to consider. The online dating market is facing headwinds, with user fatigue and increased competition from both established players like Match Group and new entrants. If Bumble can't stabilize its user base and revenue continues declining, the stock could remain under pressure or even drift lower. There you have it, a complete analysis of Bumble Incorporated, a beaten-down stock that's either a value trap or a contrarian opportunity depending on whether their turnaround succeeds. With the stock trading at multi-year lows, a clean balance sheet, strong cash flow, and aggressive restructuring underway, it's worth watching closely. Drop your thoughts in the comments below. Do you think Bumble can successfully turn things around, or are the headwinds too strong? Would you buy at these levels, or wait for more proof of concept? I read every comment and love hearing your perspectives. If you found this deep dive valuable, don't forget to hit that like button and subscribe to Smart Investing for more analysis on undervalued and turnaround opportunities. Turn on notifications so you catch my next video. Remember, this is educational content, not financial advice. Always do your own research and consult with a financial professional. Thanks for watching, and I'll see you in the next video.